Hey everyone, welcome back to Crypto Cash. Thank you again for joining me here. Hoping a great day. Once more, quick update for Bitcoin, kind of see what's going on. Bitcoin does look like it's trying to break free from this symmetrical triangle, which is generally a bearish type of pattern. You got to recognize though, folks, patterns are really only just an indication of where the price could go. It gives you a slight inclination. So I wouldn't put too much emphasis on it. But also keep in mind too, you could argue that we are printing a bearish rectangle where the price action is working itself into a rectangle pattern, just like it did the inverse for the bullish rectangle before it broke to 69,500. So again, a lot of little things we could kind of extract here based on patterns, but you never trade that solely. So please understand that is simply just an additional little bonus, I guess you could say. Because again, when we looked at Bitcoin from earlier, just a quick recap, it was moderately bearish. It still is, even though we're testing that upper 67K range. And I personally still feel like we are due to continue lower. Let me go ahead and explain why. Before we get started though, please hit the like button, folks. We actually got, what was it, over like almost 120, 140 likes this morning on the previous videos. Thank you again so much for that. Continue to show some respect and appreciation. So I can say I thank you and respect and appreciate you too. So taking a look here, 66,500 is that lower level of liquidation. I highlighted that on my TikTok, Twitter, Telegram post where I kind of just made a quick little video or a short effectively, helping understand that is an area of concentration where there's a lot of liquidation, okay? We also can recognize too, there's a lot of liquidation on the upside as well, so we can't be naive and just think the price is gonna drop because of that, but also, when you think about it, there's a lot more longs to get destroyed because we're closer to that price action than the upside. I think it's a lot easier for market makers to dump the price right now than it is to pump the price. It just kind of seems like that's kind of how it goes. But once more, we have leveraged here, delta being as high as it is right now for shorts, that we could very well see a quick little sweep of that upper 68, or sorry, that low 68K, that upper 67, and then back down, just kind of destroy any of those late shorts. So please understand that this is generally a favorable sign to the downside. When we have a lot of shorts stacking up, it usually implies the price is going to continue in that direction. Okay? However, we stay overextended for too long, so to speak, then it's more likely to correct itself. Again, this isn't that massive. It's only 2.5 billion. I think when we get more closer to like 5 to 10 billion, that's when we have cause for concern. Right now, I think if you have a short position open, I don't see harm in that. It's easy for me to say because we also have a short position open in our community, but the same thing here is I'll explain why there's a lot of reasons why the price could continue lower. Open interest is at 68,000, almost even, 68.1. Got a lot of people in the red right now. So just keep in mind that's probably why we're seeing more buying pressure because people consider this to be a good value right now, which is odd and unique to me considering a week ago we were in the low 60s, right? So again, it's funny how things can change. Perspective is everything, and then your perspective tends to change when you get used to it for some time. That's why RSI is a very helpful tool, and we'll talk about that in a minute. Quickly to note, fair value gap, 63,300, upwards of 64.7. Our macro point of control is roughly 63,000, but also got to recognize too, we got our macro 0.618, 0.65 fib levels. That's basically that golden pocket. That's right there at that $65,000 mark. So rough estimate, 65K seems like a likely consideration for a bounce. Initially, 66,000 would be that being a previous daily candlestick closure type of range. Okay? So just kind of a heads up on that. If we look at the RSI, like I mentioned, it's kind of in that sweet spot. So generally speaking, you're going to find more favor going to the upside than downside from a macro perspective, buying in this range. But this also implies we got a lot of downside without losing support too. So the truth is we're still in a macro uptrend. There's no other way around it. Okay? And I would say the easy way to understand it is that we're short-term bearish and long-term bullish, right? Easy way to understand it. Stochastic RSI is swinging down. Money flow index is now below the RSI, or effectively remaining below, which I view as somewhat of a bearish sign. And of course, we can see the MACD is still losing strength, but hasn't fully diverged yet. Key takeaway here is we're above all moving averages. We're respecting our trend, and that is essentially a bullish sign. I would say that's probably the takeaway here on the daily is that we're still macro bullish. But let me go ahead and explain the 4-hour time frame why that might be changing. Keep in mind we got about four 4-hour doji candles here right at this level of 67.4. There's a lot of confluence there, kind of adding to that support. So if we look at the local range, ever since we've been in this area, there's the most amount of volume at 67,400. Okay, so again, it's just something that's consistent right now, reiterating that maybe a potential support level for us. Once more, keep in mind we break down that'll be a macro, more so a shorter term resistance range. Okay, let's take a look here at the RSI. We're testing 50 on the RSI, so that kind of reaffirms that 68,000 roughly is that key level resistance. Money flow index is above the RSI, which is generally favorable on the 4-hour, and we got stochastics trying to swing up, and MACD is trying to shift its momentum. Hasn't happened yet. A lot of reasons why I personally still feel like we are bearish, and the main reason why is due to the fact that we're under both SMAs here, at least tentatively, right? We got an hour and a half in this candle. We'll see where it closes, but for the most part, the 50 is getting tested, and the 20-day SMA is above the price. So once more, when you're below the 20-day SMA, not a resistance level, but it is just kind of an area of consistency, letting us know that being below that, we're more likely to see the price continue lower than it would be to go up. So while we still have some good signs here, that is more of a bearish sign to me personally at this point until we break back up above. So the easy way to understand is when I finished my video earlier today, I summarized, and I think I also sent this in our trade alerts too in our Discord. Make sure you check that out. I kind of highlight coins that I'm planning to take trades with and just generally what the overall sentiment is here, right? So to paraphrase, a closure above 68,000 to me would validate an uptrend. Okay? Between now and then, we got to respect 68,000 as that resistance level for us because we're still stuck in this little bit of a range between 67 and 68K. And with this being a, with it coming down from the upside, there's more likelihood we range and then continue lower versus breaking to the upside because it's a lot less common for the price to work itself into a channel and then just to instantly break to the upside, even though this is what you want to look for in a trend reversal. That's the funny thing about it. But from a momentum standpoint, from the hourly time frame here, looking at the Ichimoku cloud and everything, there's a strong reason why we are still likely to continue lower until we see a solid closure on the daily at 68K or higher. And even if that happens, I still wouldn't trust it, to be honest with you. The way that market makers are moving right now, they push the price to specific levels and instantly reject. And I wouldn't be surprised if we just see this upper fair value gap here at 68,000 swept, and the price just rakes down from there. That's ultimately what I'm hoping for because we do have a couple of shorts open right now, and it just seems to make sense that taking along is fairly risky unless you're trading some kind of meme coins or specific altcoins, because we can see Bitcoin dominance is trying to come up, essentially letting us know altcoin dominance is going down, or more importantly, altcoins in general are struggling. So not really a long market at the moment. We will see if that dynamic shifts and changes tomorrow. But for right now, my money's on the price of Bitcoin, potentially retesting 68K before it pulls back, or just simply rejecting off this descending trend that we see here right now and continuing lower to the low 66K range. Okay, just a thought. All right, I hope that made sense and I clarified that correctly. Thanks again for being an awesome part of my life. Make sure you hit that like button if you could, please. Let's get some records here. Let's see 200 likes in a video. That'd be awesome. Deeply appreciate it nonetheless. Thanks again so much for your time. We'll see you in the next one. Take care.